Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, as you can see, I'm here with Joel Elconin and Dennis Dick this morning. So I guess yesterday didn't matter because we're higher than we were at yesterday's open. So everything is fine and everything is great, and the market is awesome. But we're going to talk about whether yesterday's sell-off is just a sign of things to come, or just a one-day thing, or buy the dip, or what. I know we have some differing opinions on that and what will continue to happen specifically in Europe. We have earnings to discuss as well: Salesforce, HP, Dick's Sporting Goods, Michael Kors, and two guests on the docket this morning. Our first guest, he will join us today, James Putra. He is the head of innovation and product strategy at TradeStation. And then at 8:35, Todd Gordon will join the show. He's a CNBC contributor and the founder of tradinganalysis.com. Joel, I got some fancy new charts this morning, so tell us what's happening in the S&Ps.
Oh, green on my screen, just like it should be. S&P's up 12 points, 27.04 and a quarter. Upside 07.75. That's your pre-market high. Good number up there. 09 even was yesterday's high, so there's some resistance. We are looking at the crude oil rebounding back into the $67 handle, up 43 cents at 67.16. Yesterday's high, 67.55. We'll keep an eye on that. Gold in the red by $1.70 at 13.030. Silver going the opposite direction, up a little over 4 cents at 16.42. And Bitcoin just hanging out above support here. We have the Bitcoin futures in the red by only $22.50 at 75.20. And wow, look at those new charts. Let's give Spencer a hand.
Not me.
Dennis.
Not
yeah,
me.
Dennis' suggestion now.
Nice, buddy.
Dennis
I was like, bold those. We got to bold those numbers on that side.
Dennis came in. Dennis literally came into the office yesterday, which he never does, by the way. And he came in here and he said, Spencer, you need to change those charts. And I said, okay. And then we did.
So now we can see them. It's not just a radio show anymore. We got a visual component here, guys. Look at us, Spencer. Right. Good job, buddy.
All right.
Yeah, Dennis comes in the office, starts cracking the whip, yelling at people, throwing stuff around.
That's what happened.
Man, oh man, getting stuff done.
I mean.
And what do we do? I bought you a lunch, right? So now I'm down to one lunch. Is that what
you didn't even buy lunch yesterday? So he's trying to sneak out of those steak dinners. He was like trying to negotiate a deal yesterday, and he's like, "Oh, I'll trade. 2 lunches equals 1 steak dinner, right?" It's like, hell no. Then he's gonna end up throwing 2 steaks on a barbecue and say, "Here, eat 2 steaks," and that's it. I think it's actually 3 steak dinners now. I can't even keep track. He knows if he doesn't pay for a long enough period of time that my goldfish memory will either forget the steak dinners altogether or at least lose one. So I think that's what's happened here. I've lost 1 steak dinner, and I think it was 3, and now I was thinking it was 2. So you're already winning, Joel.
All right, so we got 10 minutes to our first guest, and you got a lot of stuff going on there at the Ford. So
yeah.
Let's talk about Dick's Sporting Goods, man. I don't even want to look at the options in that one because that was kind of a nice setup.
We talked about it yesterday. We said the implied volatility is going to be 9%. It's up 14. So if you would have bought the straddle, you've been making money. But then you're like, maybe I'll just buy the call, because both of us kind of wanted to buy this ahead of the report. I did take it home last night. But then it started getting bid up after hours, and it was up $1 after hours and ahead of the report. I was like, you know what? Bird in the hand here. I don't have to take it through the report. It's already, $1 in my favor. So I took it home. I thought it might get bid up after hours, but I also thought if I had to take it through the report, I didn't mind. And that was because we talked on the show yesterday. We were kind of both bullish it. It would have worked out. Wish I would have obviously, took a bunch through the report, but I'm not a complete gambler. If I can get out ahead, I will.
Yeah, of course.
Just jump into the numbers there, Spencer.
DKS reporting earnings this morning. Q1 EPS 59 cents versus a 45-cent estimate. Sales 1.91 versus $1.89 billion. So a slight beat on the sales, but a nice beat on the earnings per share. Fiscal year EPS guidance coming in, well, mostly in line. Actually, I'm sorry. They raised it. They raised it from 280 on the low end of their range to 292 on the low end of the range. Same store sales were going to be flat to down in the mid-single digits on a year-over-year basis. But the fiscal year EPS guidance raise, even though it's only like 10 or 12 cents, is nice.
I mean, it's difficult to come in here and say, okay, what's up 18%, it's overdone, because we saw what happened with Tiffany's. We saw what happened with Ralph Lauren. They had the gap and go. So you got to be cautious here. That being said, you do have a lot of overhead supply right in this 35.70, 35.80 area. We're a little bit above that right now. If you can get up over 36, it opens up, though. So I think I'm too scared to come in here shorting it just because of the Tiffany's and Ralph Lauren, the ridiculous rallies that they had after their earnings reports. So sometimes these things can actually gap and go, and that's been the trend a little bit in some of these retailers. So believe it or not, I'm not fading this pop.
Yeah, $36. You mentioned that 35.76 high. That was back in March, on March 16th. So we're already above there. But I'd use 36 as a swing number. I'd also, be hesitant because, still got I think that Tiffany's is still going up, isn't it? I mean, that
might never stop going up.
Look at that.
It's set against the 130. It's gonna, if they take out 130, it'll be in blast off mode again. That's a double top right in the same area. No such thing as a triple top. Actually, the last 2 days, almost identical highs there, Joel. 129.93 and 129.93.07. So yeah, basically identical highs. Probably ahead of some size at 130. So that's the next bogey for Tiff.
And just you want to see what else is chomping at the bit? This is something that I've discussed that I picked up in the lower 34s. L Brands, look at that, trying to take out 36 here. Last two highs, 36 even, 574 and 35.55. It also stalled at 36.24. So 36 is a big number in L Brands as well.
I like that chart. I think that's ready to go too. These retailers so hot right now. These retailers, except for Michael Kors.
Sell banks, buy retailers.
Except for Michael Kors.
All right, let's talk about the Michael Kors report.
Spencer, I dropped you so many hints on that one.
I was on mute.
He's admiring his new charts. He's looking at his new charts.
Give me a break. It was like 3 seconds. Q4 EPS 63 cents. That's a 4-cent beat on the estimate. Sales 1.18 versus $1.15 billion. Q1 sales guidance coming in higher than the estimate, 1.14 billion versus 1.09 billion. EPS guidance for Q1 coming in higher as well. 90 to 95 cents is the range they gave. 88 cents was the estimate. Fiscal year sales guidance coming in higher. Fiscal year EPS guidance coming in line, but mostly higher guidance across the board and earnings beat.
I mean, here's a stock that's run up into the report. Here's a stock that is not even that far off of its 2-year highs here. We're still significantly off the all-time high when we got up to $101 back in 2014. But it's a stock that run up, so it needed to blow it away a little bit more. It didn't happen. That's why the stock's trading down the pre-market.
But the bad news is it's trading down $1.62. The good news is it's $3 off its low. They got real excited. They took that down at 63.15. That makes me think the bottom is in for at least today. Low at 62.71 on May 15th. So big support there. But now we're coming back up. So first number I'm going to look at, fill the gap, 67.25. That was yesterday's low. And then if you really go into rally mode, keep an eye on the 68.50 level. Just as we consolidated, over the last 3 sessions ahead of the report, he had 3 closes right at the 68.50 level. If we do go into reverse, but you're looking for a number ahead of the pre-market low, 65.05 was your 4-day low.
Okay, jump over. We do have some other earnings from last night in Salesforce.com. CRM Kramer on Mad Money said this was one of the best reports he's ever seen. It's funny, like when he gets the companies that he likes. He said that like a few weeks ago and said this was one of the best quarters I've ever seen. I think it was NVIDIA or one of them. Anyway, CRM, he said it was one of the best quarters he's ever seen as well. 133.20. This stock reported last night. This stock is making new all-time highs. This stock's numbers are.
Well, also, didn't he have Benioff on the show? So
yeah, he did.
Okay.
So when he has a guy on the show,
yeah, he's not going to say. He's not going to say I didn't like the report.
I like
anyway,
the quarter. You suck.
Anyway. Q1, the GAAP EPS 46 cents. That missed by a penny. Again, that was GAAP. I don't have the adjusted number in front of me. Sales 3.01 versus 2.94 billion dollars. Oh, actually, I do have the adjusted number. The non-GAAP EPS was 74 cents, and again, the 7-cent estimate. So nice beat on the adjusted EPS figure. Q2 EPS guidance coming in a little light, actually, 46 to 47 cents versus a 52-cent estimate. Q2 sales guidance coming in higher, and the fiscal year sales and fiscal year EPS guidance all coming in higher. So guidance higher across the board except for that Q2 EPS figure, but the earnings beat and the high guidance.
Making new all-time highs. I don't like short stocks making new all-time highs. So we'll throw this one to Joel.
133.74 is your pre-market high, after hours high, that's called. It bumped up there against twice. It bumped up there again this morning. So potential seller at 133.75 to 134 even. That's the only thing I can give you. Former all-time high, which we're blowing away, was 131 even. So I'm sure some shorts would like to see that to bring it in. Big old gap down to 127.54. But we'll see if it can get to 134 and keep on going.
And then last night also HPQ reported earnings, and it was down. It was up. It was down, and then it was back up, and it is up right now. So I guess when the dust settles, they like the quarter numbers, Mr. Israel.
And one quick thing on the charts before I read the HPQ figure is I decided to make the pre-market action is green and gray. So the session is the session's red and black, and the pre-market after hours is going to be green and gray, and that's how you, if you have opinions on the colors, I'd love to hear them, but that's how we differentiated pre-market.
Spencer's taking opinions here. If you want to change the colors, give us a tweet at us.
Yeah, let us know.
Or let us know in the chat. We're
getting some love here. We're getting some love from Jazzly Man here in the YouTube chat. Not a lot of love coming out of the other chat.
Oh yes, they are. Give him a break. Okay, HPQ.
The charts are easy to read. Lobster.
I don't know.
That's right. Okay.
I think they like the charts.
I don't know what chat Joel's reading. Q2 adjusted EPS.
I do. I apologize.
All right. HPQ 48 cents in line, sales 14 billion versus 13.57 billion. So nice beat there. Q3 adjusted EPS guidance coming in higher. Fiscal year EPS guidance coming in higher, and they have a new CFO.
Higher HPQ. 22 bucks. It's still on my buy list. I still want to buy this one in my invest portfolio, but you know what? I'm still gun shy a little bit here on the overall market, which we can talk about in a second, but 2.53% dividend. I like HPQ long term. I think you're buying it here at 22 bucks, and you're looking at it 5 years from now. I think it's higher.
Oh man, look at this. Last you had 3 out of 4 highs between 21.90 and 21.98. Just break it out over 22, only by a nickel here. But let's see if we can hold 22. Things really open up to the 22.50 area. But I don't know if there'll be enough sellers in the book to keep it down for the open. Should we go to James here, or do you want to? It's 8:15.
Yeah, but let's take a break because he's a new guest, and I want to throw him under the gun right off the bat. So we're going to take a quick break, and we're going to grab James Putra from TradeStation. We'll be right back. All right, welcome back, everyone, to Pre-Market Prep. Spencer Israel, Joel Elkanah, and Dennis Dick. Dennis just had to step away, but you can see we are joined by a new guest. That is James Putra. He is the head of innovation, I guess that's his title, at TradeStation. James, how's it going today?
It's fantastic. Thanks for having me on today.
All right, so Director of Product Strategy and Innovation at TradeStation. Now, you kind of had an interesting path to that. Just kind of talk about like what really sparked your initial interest in this, and just give us a quick update on your path to TradeStation.
Sure. I've been in fintech for about 15 years, starting a couple companies, some hedge funds on my own. I got involved with TradeStation when they wanted to take the product globally from the US all around the world. And then little by little, I got a little stir crazy, and I convinced the executive team that we should have an innovation lab, and did a couple of crazy things, got an innovation lab off the ground, and we're basically running it like a startup within inside the organization. So a little bit of craziness, a little bit of ambition, and now I'm head of innovation there, and it's awesome.
So 15 years in fintech. I mean, that is, that's amazing. You've been at the FinTech Awards. Obviously, you've been to other events. Just talk about, like, in 15 years, perhaps what was, like the game changer or something that happened in your evolution in the markets that made you say, man, this is the future. This is the way I got to stick with this. This is the way to go.
Yeah, I mean, for me, it's coming as a trader. I think I was probably 18 years old. I made my first trade. I bought Best Buy after fighting with my dad for about 3 years. Like, I really don't like markets. This is for old guys. I made a Best Buy trade. I made a few bucks, and I was hooked after that. I mean, I think that's, for me, I've always been motivated by the trading aspect of the business. And I kind of found myself a nice niche between understanding what's happening in the markets, how to actually trade actively, and then trying to design solutions. And most of them have been self-serving in the sense that I design the tools that I need or my friends need, and it just happens to be what most of the active traders need. How's it going, Dennis?
I was on mute. Pretty good there. How's it going? Great to see you.
Yeah, it's been a while since the last time.
Yeah, we had a nice dinner there in NYC, so great to see you too.
All right, we won't go into any of those
No details.
No details reserved. Okay, so I got Dennis back here, and we go back and forth on different issues, but I know TradeStation's help with the launch of like Bitcoin and Bitcoin futures, and we have a great. I've done some investing in it, but Dennis can't value it. So I'd like to bring different people on to challenge Dennis, and you're one of the smartest ones I've run across so far. So just talk about your introduction to it, how you're approaching it, and how TradeStation is doing with the futures trading.
Sure. So in terms of how to value it, I think that's kind of the $1 billion question that everyone's trying to figure out. How did I approach cryptocurrencies? Extremely skeptical and negative at first. I spent about a year talking to one of my buddies from the bank, and he's telling me all about this new magic Chuck E. Cheese money, and he was getting me all excited about it. And I just kept telling him, I really don't have any interest in this. I'm too focused on other things. And then I started to look at what was happening in the market in terms of volatility. And I was like, you know what? Let me just buy $500 and see what happens. This is probably about 3 years ago. And I started making money really quickly. And I was like, wait a minute, this is interesting. Coming from my trading background, for a long time, trading has been really boring. Since 2008, they kind of ran FX out of the US, and there wasn't a lot of volatility in the markets. And I was just bored. Like, you just put money in and you don't have to do anything. And then I came across Ethereum and Bitcoin underliers, and there was a ton of volatility, and I could actually use my technical analysis to start trading these. I'm like, wait, this is cool. This is really interesting, really fun. On top of it, you make some money. So that was really good for me. And after that point, I started to make a little bit of money, realizing you could trade this. I got hooked and just went down this rabbit hole of learning. I'm kind of a knowledge junkie. So I just started going around and around and around, talking to everybody, learning, and spent about 2 years really digging into this. I launched a company that does crypto mining. We've got a couple of innovation projects at TradeStation where we're doing mining, we're doing wallets. We're also looking at if there's possibility to do any trading here. How does TradeStation look at the market? I think that's driven a lot from Japan, right? Our top CEO has said that we are going to be a crypto-focused company. They bought CoinCheck, which is a pretty huge crypto exchange out of Japan. I think it's the largest for volume. Then they really have driven that from Japan all the way down here, and it's given us a renewed focus on the crypto market. What's kind of interesting for me is that I went from being this crazy guy running around banging the drum about Bitcoin to now, hey, we need someone that knows about this. Can you please go talk about it? So I went from being like a total off the wall nerd to someone that has kind of an idea. And I look like a genius after November when the thing just rocketed out. But so we're looking at it very favorably. I think we are one of the few brokers that are actively out there trying to engage the market, and really one of the forethought leaders here in the US from a brokerage perspective. And how do we offer this to our customers? Coming from the regulated side, it's really not an easy asset class to approach. And so we're working closely to try to figure out how to do that safely. And we've really been a big proponent of the exchange listed functions. So the futures markets, that's been pretty good for us. It's gotten us a lot of visibility in the market, being able to come out and talk about these and really try to fine tune our processes, meaning like, how do we provide education? How do we approach the market from a risk perspective? And it's really in a contained environment in the futures market. And so we expect that as the other products come out from ETFs and others, that we would like to list those as early as possible, if not day one.
James, can you talk about the mining aspects of Bitcoin there? You just mentioned briefly that you're doing some mining. And I find that the most interesting aspect of it, because it feels like it's kind of free money. I mean, if you can mine these coins where, $1,500 in electricity or $2,000 in electricity and turn around and sell them for like $7 or $8 grand, I mean, that seems like, pure arbitrage to me. Talk about that aspect, and maybe it's just not that simple.
So I think we can simplify, right? I mean, at the end of the day, the idea with mining is, can you make the coins cheaper than you can go out and buy them? And the answer today is yes. So based on the sort of average electricity rates around the world, you're able to produce a Bitcoin less than you can go out and buy it for. So depending on where you're located in the world, you may have a higher electricity rate or a lower electricity rate. Here in the US, I think we're averaging around $6,000 per Bitcoin, maybe less in different jurisdictions. But here in Florida, I think we run about 12 cents a kilowatt hour. So the idea is, can you mint them and then sell them? So for us, we're inventorying the coins. We're just holding on to them. But ultimately, we'd like to start to sell them. But think about it on the manufacturing process. It's electricity converted into crypto tokens. That's really the rough manufacturing part of this. But overall, do you want me to go into it all, like the purpose of mining?
How much, so you're in Florida there, and how much does a typical Bitcoin cost to produce, if you will?
So we're focused on Litecoin at the moment, our area. We're doing a couple of other coins, but inside of ours, we're producing them for sub $70 on Litecoin, and they're going for about $100 right now. So there's definitely a little bit of an advantage, yeah. But now what happens is, as more people come in the market, it gets harder and harder and harder. So with the price is pretty stable, the harder it makes it harder to mine the coins, and you don't make as much. But if prices go up, you make more. If prices go down, then you lose money on the trades.
What about the energy cost, like the energy and the impact on the climate here? Because I've read articles, and obviously, and my wife's a big fan of everything green here, and she hears about people wasting electricity to produce these Bitcoins, and she automatically hates Bitcoin for that reason. I somewhat feel the same way, and to a certain extent, is that it kind of feels like a little bit of a waste of energy, doesn't it?
So I definitely don't like.
Is there a better argument that I can give to her so she doesn't hate Bitcoin anymore?
I don't know that there's a better argument. I think that overall, as an industry, it's really not efficient yet. And we need to look at more effective ways to generate power, whether it be through solar or wind, and use much more of a renewable sources. However, I read an interesting article today that was comparing the creation of Bitcoin to the creation of weed. And not that they're similar, but there is a certain amount of power required to grow marijuana, right? So there is also power consumption there. There's power consumption to grow cryptocurrency. So not that it makes it any better, but there are definitely patterns out there that we need to look at to see where we can create more efficient energy creation.
I guess it uses power to do everything. I mean, I'm using electricity to trade my stocks. So I guess from that perspective, I got an electricity bill here as well. It may not be in the thousands of dollars a month, but I got 5 screens running here and they're all lighting up pretty good. So I'm sure I'm using some hydro to produce profits in the market.
Yeah. Well, I think that the interesting part there, like what's not great is that you're actually consuming a lot of free electricity. So you're going in, some of the miners are going into cities and municipalities where there is low cost energy and taking the bulk of the low cost energy. And that's causing the electricity rates to go up for the citizens of the cities. So that's not a great deal. That's really like bad actors in the space. So that's where you need to become responsible in terms of using electricity. Now, there are places in the world, such as Canada, where they have too much electricity and they're just throwing it away. So those are kind of interesting places where you can use the full capacity. So I think becoming responsible and looking at how you can absorb the excess capacity, but not absorb over excess is maybe the right approach.
All right, I got a layup for you here coming from. I told you I'd be easy on you the first time, not the second time. Can you trade all products at TradeStation, stock, options, futures, and how is it better than Thinkorswim and Interactive Brokers?
Oh wow, that's
a half-hour question. I know.
That's a long question. Yes, you can trade all products. You can trade all products on one platform. How are we better? I think the focus for TradeStation has always been on individual traders that operate as a business, right? That's really the way we approach the market, who we engage with. So we tend not to approach you and say, hey, do you want a checking account? Do you want this like long-term investing product? We approach you in a way that we understand who you are as an individual and that this is your business. This is what makes you money. So it's a little bit of a different lead time when so you're making money and this is your business. If you have a call, if you have to call us, we better answer the phone and help you out right away. And so your sensitivity to wait times, your sensitivity to price, your sensitivity to complications it's much higher. So we need to be really good at treating the customers as though they're running their business on top of us.
A couple here from the chat, James, before I'll let you get out of here. But someone, with regards, going back to the Bitcoin conversation, somebody wanted to know how long before no new Bitcoins can be mined? Do you know?
2021, I believe we're about to have a half-life. Half-life meaning half-life means that we stop creating as many Bitcoins. I think that's happening sometime next year. So right now we're creating so many Bitcoins per 10 minutes, it's going to cut in half and it's going to gradually decrease until 2021.
What happens when you don't mine anymore? Like, how does the whole process continue to work? Because the mining itself is the verification process for the transactions, is it not? What happens after that?
So it's a really interesting question. The idea here when they first started the algorithms were that in the beginning, there's not enough participation and there's not enough transactions on the network. So they need to reward the miners with something, which are the block rewards. What happens over time is that the block rewards will decrease and the expectation is the transaction volume will increase. So each time you mint a Bitcoin, you get rewarded for finding a block as well as all the transactions that occurred in that block. So you become less dependent on the individual block rewards and you just start making transaction rewards on top of it. And so the idea is that over time, the transactions outpace the underlying block rewards and you no longer need them.
All right, James Putra is the Director of Product Strategy and Innovation at TradeStation. You can find anything on there. Go to TradeStation.com. That's what we use for our charts, our nice new pretty charts. James, thank you so much for the time this morning. Great conversation, and we'd love to have you back.
Thanks again. Take care, guys.
Thanks, James. You're getting some love in the chat here as well. We'll talk to you again soon.
I just hung up on James. So.
Can you believe this Dick's Sporting Goods? I'm about to. Oh, man. Yes.
We said 36. I said I wouldn't be fading it. That's just goes 25% now.
$38.
These
Dennis.
retailers gap and go.
Dennis, I want you to put an end to this Dick's Sporting Goods.
You want me to sell it all? No, I'm not fading it. I saw what happened to Ralph Lauren. I saw what happened to Tiffany's. There was another one in there too. I can't even remember the other one. Foot Locker. Those three things were monsters. I mean, that's what's telling you. You can't come in here and just say, okay, this is too much because it gets more. So
Dennis, I know where you're going to start this.
It saved me a lot of money. They're watching the Ralph Lauren and Tiffany's and Foot Locker just keep going because I did not short Dick's Sporting Goods because of that. And I probably would have normally. I probably would have been trying to like 35, 75 and like banging my head against the wall right now. So you know what? You got to take the tells. Trading is like poker. take the towels that are out there. Watch what happens with the other stocks. And, when you see, that these, gap and goes have been happening 2-3 times in the past, especially on Foot Locker, which is obviously similar stock, similar, business model there. I mean, they're selling shoes, but Dick's sells shoes too. I mean, that's why we were saying it's potentially, this could really go. That's, and it did, obviously. So anyways, I'm just trying to
I know where you're going to short it.
I
know 40. 40. Get out there at 40, Dennis.
Well, that's a big number. Let's go look at the book.
Book. They're not going to go out that far.
Let's see if we have anything lean on at 40. Is there anything leaning? $40? Oh yeah, the book. I can see. I got this. Yeah. They expanded the depth of the book. You can see a long ways now. No, I don't see much in there. But again, it's early here. I bet you there's some size there, 40. So yeah, in any regard, you've got to be careful fading these things, and you got to realize the market environment that we're in here right now is conducive for the gap and goes on the retailers, and that's what we're seeing on Dick's Sporting Goods here today.
All right. We got about 3 minutes here to our next guest. But let's, did we finish up all the earnings here? Let me go to my.
Well, yeah, we've got, there was a couple. DSW reported. There's also ADI reported there this morning. It's trading up slightly. And then we also had Movado, MOV, which is reported as well. And it's getting a big pop.
You know what? I was thinking about that one because that fossil dog had.
Yeah.
Yep, that fossil dog. Damn, that's still going from its earnings report.
I think it was in the doghouse is back. I mean, this is, this kind of market is how it works. Some rotation happens, but everything that was pretty much in the doghouse for so long. And I mean, you look at some of these, like Signet Jewelers is starting to come back here. LB, like you were just saying, Joe, a lot of these stocks that were, really in the doghouse here, those are the ones that are barking. We say the dogs are barking, and you're starting to see a lot of the stocks that were beaten down actually be the ones that are rallying here right now. But, there's other things out there too. And we haven't talked financials yet. I do want to talk those. Maybe we'll wait after our next guest because we only got a minute here, and that could be a longer story here. But, as good as some sectors look, the banks are popping here this morning because TLT is way down. But I'll tell you, they still don't look good overall.
All right, let's. We got a minute. Can you hit us with some imbalances?
Yeah, let's go take a look. So we got Bank of America 123,000 to buy. Like we said,
what happened in the market? Hold on 1 second. Do we have some news here in the market? We just dropped 3 or 4 points real quickly here.
We got GDP. GDP at 830. 2.2 versus 2.3%. I mean that's light, but that's not.
Yeah, but the GDP was 4 minutes ago, yeah. So maybe a little bit of a delayed reaction now. They just hit it. So sorry to interrupt you here, Dennis. Go ahead with those.
Anyways, Bank of America 123,000 buy, Citi 69,000 buy, JP Morgan 72,000 buy. Kind of opposite day of yesterday. Financials are actually leading us higher. Deutsche Bank is up here this morning. That helps, but also the TLT trading down $1.33. That helps as well. And we know the banks move opposite to the TLT. Looking here at other imbalances this morning. Small buy imbalance across the board to be expected when you're trading up here. I do notice Alibaba's small sell imbalance of 31,000 shares. BABA is such an interesting chart. It has just been hanging out here for the better part of 2 weeks. Up over 200, right around 200, down below 200. It can't decide if it wants to break out or not. I mean, some of it looks like it's kind of wants to go, and then you look at it and you think, well, maybe it's going to fail here up at the same area that it's failed multiple times before. So jury is still out here on Alibaba if that rally continues. Quick technical thoughts, Baba, and then we're going to go to our next guest.
Baba, I mean, it's trying. You got to get the closes above that level. You've had a couple pokes at it, but I will not be totally convinced until we close above it and have at least 2 or 3 closes. Got all the way to 202.28 yesterday, but closed at 198. So got to get those closes above there and for a little bit more stability. All right, let's bring in Mr. Gordon.
All right, let's take a quick break, and we'll grab Todd Gordon, founder of TradingAnalysis.com. And welcome back, everyone. PreMarket Prep, Spencer Israel, Joel Elkanan, Dennis Dick on now with Todd Gordon. You may have seen him on CNBC, or you follow him on his site, tradinganalysis.com. Todd, how goes it this morning?
Yeah, good, Spencer. How you guys doing?
Doing pretty well. So it's been a while since we had you on. What's been on your radar the past few months?
Oh, not much, guys. Good event in the city, and I saw pictures. I know that went well, and yeah, markets are doing well. Kind of taking more of a sort of a range bound sort of, with all the news happening in Europe. I'm kind of focused more domestically on NASDAQ. I think tech hangs in pretty well despite everything we're talking about here. So I'm focusing there. I've been looking at the cryptos, hanging on to support, technical support for dear life. And I think they're starting to show us something down there. Bonds on the move up into resistance. So yeah, I'm kind of trading with eyes wide open here. We are still net range bound for 2018. So I'm trying not to read too much into the price action because we are still sideways.
So, all right. I got to get this in. Sorry, Spencer.
He starts it out with, all right.
Because I'm upset here about the Belmont. And I just want to see if you share the same sentiment as me about Audible not running in the Belmont.
Yeah.
Yeah, because Windstar Farms has a majority stake in both horses, right?
Inside job. Which one do you run, right?
Oh, well, there's no doubt that you'd go for the Triple Crown and you keep the other horse out. But to me, I mean, that taints the race. I'm upset. It's taken all the excitement. I was ready to bet the Audible, Justify Perfecta, or, put it the other way here. And man, I guess you're not as disappointed as I am.
I'm I'm going to be honest. The house is on the market and I'm moving to Saratoga just so I can keep up with your conversation in horse racing, Joel. I mean, I've got to be boots on the ground, just immerse myself in the industry, as if trading's not enough. And then I'll come back on. Maybe when we finally get there, we can do a broadcast from Saratoga. But I got to tell you, I'm in New Jersey. I've got my house on the market. Just watching the transactions, talking about being involved, watching the transactions of real estate with higher interest rates, it's starting to tick down. I see it. I don't know if because I'm emotionally invested, but I see these higher rates starting to hit the real. Yeah, I see it. I'm surprised how long we've been out there watching the other ones. I mean, this move up in rates has been, obviously we squeezed higher, but it's definitely hitting real estate, and you can see it in the charts. And I'm involved in it, and I don't know. We'll see if it continues, but I feel it.
Really? So, I mean, let's just talk about that. Yeah. Let's talk about, the TLT here. I mean, it's just hanging out at the lows of the move, or talk about interest rates. I mean, the theory is that the market can continue to go up, as long as, if interest rates are moving up as well. But do you think this is going to have an effect on the overall market?
This current move up in TLT lowering yields, or the overall downtrend in bonds move up in yields?
Yeah, the overall moving up in rates.
Yeah, it definitely put pause into the uptrend in equity. I mean, we are up maybe less than 50 basis points or 100 basis points for the year in the S&P. It's certainly been a strong move, but from a technical point of view, the 115, 116 level in TLT, they tried it hard, really hard. And a little bit of hindsight that does no good for the viewers of Benzinga. I did buy TLT on CNBC on our show, Trading Nation. I sold it up into the 122. I did a 118, 122 call spread just up to the old wave 4 high there at 122. I feel like for now, I think we start to go into consolidation. What impact it has on the overall market, I'm not sure. I think it's always the pacer rates, right? How fast are interest rates moving up? How quickly can corporations and central banks adjust to the move up in rates? So I don't know. I think that's the big question. And the only thing I can say to you right now is I don't know if this economy can continue to propel ahead with rates going up at the rate they are. I just don't know.
Well, but what about the banks? The banks are certainly not acting like rates are going up here. We were going to talk about that.
Yeah.
I mean, boy, oh boy. I mean, like this Goldman Sachs chart here. I mean, that thing looks absolutely horrible. Bank America here. So it doesn't, I mean, either all the moves have already been baked in or, people think the Fed are going to take the foot off the pedal here. Any comments on the XLF or the banking sector?
Yeah, that financial really just came off pretty hard. And, it came off. Yeah, XLF is challenging 26.5, but keep in mind, XLF is in challenge in the highs where the S&P was pushing up towards, February highs, where XLF, really just did about a 50% retracement of those Feb highs. So it underperformed on the way up, which is quite interesting to your point in the face of rising rates. That net interest margin really helps the financials. And boy, with volatility picking up and some of the trading banks, they look terrible. It just goes back to that, the sovereign debt crisis. I used to trade for a foreign exchange fund, and we traded through the sovereign crisis, with Greece and Cyprus and Italy and Spain. And I'm sorry, I'm not being insensitive. I'm kind of rolling my eyes because they told us every single day how the EU was going to come apart. The euro was done. And really all it did was suck volatility out of the markets. So I don't know. I mean, I think the banks are selling off more in expectation of what might happen in Europe, but I don't know. I just focus back on the tech. I look at NASDAQ in the US, and that's kind of where I'm focusing my trading. Like I'm seeing just really good relative strength, on our big FANG names, and Netflix and Nvidia were acting really strong in a down tape the last couple of days. Facebook's looking fine. Amazon, as I just mentioned, looks great. So I'm kind of focused on the Qs. I've kind of layered some butterflies with positive delta on the upside in the Qs over the last couple of days, just kind of lightly positioning there, not getting straight, just buying option premium, but just kind of putting some theta positive butterflies on to take advantage of a little move up in the Qs. That's just kind of where I'm hiding out in here.
I mean, I can see that too. I mean, you look at Apple, you look at Microsoft. Even yesterday, those stocks did not want to go down in a terrible tape.
Right.
You think about Apple, it looks like it's inching just to make new all-time highs here. Again, Microsoft's banging its head up against the wall near 100 now.
And Dennis, what's the number? I every time I look it up, it's different. When does Apple hit $1 trillion?
Spencer, do you know that? When is the actual? That's a good question, actually. Somebody said I think it's before 200.
I think so. I think it's in the 90s, and you got to think.
Let's go take a look at the market cap right now on Apple, and we could do some quick air math here. We'll see how good all of our air math is here. We're at 923 billion. There is 5 billion shares outstanding.
Oh man!
So you're still actually a little ways away. So 5 billion, so it needs to go up another. Actually, might be above 187. So 5. So you need another. What, Joel? Joel, you won that math competition when you were a kid. Go 5 billion, so 8. So it looks like 20 points.
205. Wow.
Yeah, it does. Somebody said it was under 200, so maybe my data's not. I don't know if it's accurate. Spencer, what do you have for shares outstanding on Apple and market?
Come on, I'm sure there's some smart viewers in the chat room, and I'm sure they're giving you.
It looks like 203 to 204 to me too, Joel. But somebody I saw it go by my timeline on Twitter there the other day, and somebody was saying it's like 196. So maybe
I thought it was 196. Yeah,
I think it's 203, 204 when I'm doing the quick air math though.
Okay. But Dennis, are you using the Canadian dollar for $1 trillion?
You always pick some Canadian. Yeah, that's. I got my dog sled out there in the parking lot there too, Joel. So
help us with this Apple chart here, Todd.
Yeah.
Nice run up, nice consolidation here. So look at that. I mean, just flagging here after a big move up. How do you interpret a move like that?
Yeah. So for Apple, I'm just pulling up my the wave counts, and that's kind of how I time the trades.
Okay.
I have us starting what they call a new kind of Elliott trend wave from February. So that would be wave 1 from February up to March, a nice, beautiful 2-wave setback there, wave 2 setback in April. And I think we're in the midst of a third wave right now. So wave 3 should take us above that 200. I'm pointing towards like 225 right now. It's a pretty strong move, but I don't see how it could be anything but that. I do think we continue to rally here for another 6 months. I think tech acts well. We're definitely in a flag pattern. I don't know what finally breaks the market free. But yeah, I think we got 225 in the charts here in Apple, and I'm going to continue to play. Like I said, I'm not, I'm really managing risk in here. We are coming into some slow market environment here, obviously in the summer. I like the way the NASDAQ is acting. Small caps look well. So like I said, not paying for a lot of stocks. I'm an option trader. So I'm doing these butterflies, which basically you sell 2 in the body and you buy 1 above, 1 below. You try to put your deltas, which is, if you're long or short, try to make them slightly positive and just kind of collect some theta because volatility is still elevated here. So that's just kind of what I'm focusing on.
What about oil? We obviously, before last week, we were looking great. Now we just went into this collapse mode here. Well,
but you know what? That's what I've been saying to my subscribers and guys. It's not looking good. Everyone's like oil. But if you're a real technician and you look at the structure, you look at the shape of the rally in crude oil. I'm just bringing up my chart here. Yeah. You look at the shape from March. A lot of overlap in those corrections. Not a lot of strong momentum. It's nice that it's breaking up through 70, but that was an ugly rally. Nothing like what it looked like from when oil went from 44 to 66. So to see it get slammed, I'm not surprised. We are testing the uptrend channel that is sourced from August of 2017. If you start breaking below 66, that could be an issue. But I think the bond trade and I think the crude trade are very, very much related. Bonds moving up, that's a disinflationary, deflationary signal, whatever, even though if it's a short-term oversold. Crude selling off. I really think the name of the game here is consolidation. I'm going to try to put some butterflies on in crude, just kind of hang out in the $70 region for a while. I think the bonds kind of consolidate. I do think Europe kind of settles out here a little bit. I don't know. I'm short the excitement.
Todd, I had a question that's from something you said way back at the beginning of the interview when I asked you what you were focused on. You said, you're less focused on Europe, maybe more focused on tech right now or the NASDAQ. When you say that you're taking your focus off of something and focusing onto something, how are you actually doing that? That you're obviously not ignoring the European markets, even if you're not watching them as closely as you were before. Yeah. So how, when you say you're not focusing on something, how much are you not focusing on it, or how much are you focusing on it?
Well, okay, that's a cool question. Am I trading it? No. I mean, do I want to be short those financials? Absolutely. I mean, you look at JP just kind of hanging on to a triple bottom. XLF continues to underperform. I think that's just putting, just kind of keeping the NASDAQ rally under wraps. I think it's pushing it back a little bit. So when I say I'm not focusing, I'm not trading it. And I'm using that opportunity to be short option premium in the NASDAQ. The NASDAQ's kind of saying, let's just get through this. Let's get a government established in Italy. And then let's simply move on and rally into the rest of the summer. So that is causing me to not just buy option premium or just be long the market, kind of throttle back my aggressiveness and structure the options so that, it can move up a little bit and can hang out a little bit. Just basically option strategy selection is the way I acknowledge that. The financial and European situation.
Okay, so you're just less likely to trade it, but you're still obviously keeping abreast of what's happening, and you're looking at charts, but you're just not
exactly right. Yeah.
All right. Todd Gordon has been on with us. He is the founder of TradingAnalysis.com, also a CNBC contributor from time to time. Todd, thanks so much for the time. As always, have a good one, and we'll talk to you soon.
All right, sounds good. Thanks, guys.
All right. Thanks, Todd.
All right, S&P futures hanging out over 2,700 here, up 950 at 2701.75. We'll see if we can challenge that pre-market high. Just want to go back here. Spinner's talking about a delayed reaction in earnings to HPQ. Let's see if that is still holding above $22. And it did, breaking out HPQ. Real quick update on Dick's Sporting Goods here. You did finally find a seller here. 38.40 is your pre-market high. So make sure that you get continuation through that level or else definitely could peel back. Fuzzy's been patient. Let's talk about Borg Warner here for a second, trading up 24 cents after getting killed yesterday. Was that earnings yesterday in BWA to see it get killed like that?
That's a good question.
We're both going to our news feed to see what the Borg Warner news was yesterday because I did not notice it in the news.
It wasn't earnings yesterday.
I think it was just a matter of everything was certain sectors were really getting hit hard yesterday. Was there anything?
Just looks like they're just
down 4.4%, so 6%. I'm just looking at headlines there. I didn't really see a real driver there besides the overall market. I mean, certain sectors just got really pummeled yesterday. I guess for whatever reason, maybe there was something there with BWA, but I don't know the fundamental story or the fundamental catalyst that knocked it down. But I will tell you, just my opinion, when you see stocks get beat up like that, they typically don't bounce right back. Because what we always say, Joel, is overhead supply. There's going to be people who bought this thing above 50, 51, 52 that are looking to get out on any pops. So believe it or not, when you usually see a big, ugly candle like that, path of least resistance is actually farther down. So I'd be a seller of pops on this. That's my opinion. Obviously, we just give opinions on the show, but if this thing pops up at all today, I think you find more sellers.
And it just looks like someone wanted out of a large chunk of stock. Averages like right around 750 to a million, but 3.2 million shares traded yesterday. I would want to make sure this stays green here on the session. And if you take out yesterday's low, I think it's pretty simple here. You have two targets to look at, 47.38. That was your May 4th low. And then on May 3rd, you had a low at 46.97. So keeping a close eye on yesterday's low. Getting some questions here on Baidu. Now that Baidu got absolutely rocked. Ooh, Dennis, you're gonna like this chart, man.
Consolidation station.
Yeah, and it's holding a low. Nice gap fill. I think we were talking about that gap fill at 39.40 on that second day after it was getting killed. Can we break out here above 246 and get some greener territory here? That's what I'm looking at. And for a swing trade, you got to stop yourself out at 237.83. That was your low on May 21st. Dennis,
yeah, I completely agree with you. The low, actually 236.61 I got on May the 23rd. If you cut through that recent low from 4 days ago, I'd be getting out of it. So if I'm buying it here and saying I think the recent bottom is in, and I think this thing could come back, you got to have a stop out, because what happens is if you take out that 236, you start to open up once again. And a lot of times what you see is a big move, a consolidation of that move, and a continuation of the original move. So if I was just betting here, just technicals, not knowing anything else, I'd actually say this is consolidating. It could possibly go down. I would like to play it short through 236, but I'm not going to make that call. I'm not going to make coming here and short at 242 saying it's going to take out the 236 low. But if it was to take out the 236 low, that's when you strike. Because I think there's some easy money from 236 to 226 if it takes out that 236.61 low. If it can hold that, it can crawl its way back and start to come back there. But a lot of times you see a move, 5-6 days consolidation of the move, and a continuation of the previous move, which was down $40. So that would take us down. If you continued down, you could get down 220, 210 even on that. But, there's lots of other catalysts here. There's lots of other. So as long as it holds 236.61, I can't argue if you're trying to play for the bounce either. Jury is out here, though. Takes out 236.61. I'd like to be short.
All right, let's go analog devices here. They did report. Spencer, you got the report for ADI.
Never remember that ticker. Yeah, ADI. I always think it's like ANLG or something. ADI Q2 EPS $1.45 versus $1.38. Sales $1.5 billion versus $1.47 billion. So a beat on both those numbers for Q2. The Q3 EPS guidance is in line. The Q3 sales guidance is also in line.
Stock trading down slightly here in the pre-market. Actually, no, it's trading up. Sorry, It's up. ADI, I had the wrong ticker up there. Look at that. Paul, I never make mistakes like that. Anyways, it's come off the highs a little bit there. It was trading up a little bit after I was ahead of the report last night. There's not many bids in here, and that's what's concerning here too. The best bid is way down at 93.01, which is $2 lower than it's trading right now. So just because it's trading up 95.20 in the pre-market doesn't mean it's going to hold. If this decides to start to sell off, which I kind of think it might, just because there's no bids in the book, then 93.88, the low from yesterday, that's going to be your first stopping point. If it takes that out, then it gets ugly. So again, jury is out here. It's light volume. It's only traded 6,000 shares. So price discovery is still happening. We're going to have to wait till the open to probably get the real price discovery. But you got to be careful on this. If it takes out yesterday's low, I don't want it. It may bounce there. It may actually, and maybe it just starts lifting too. The report wasn't that bad, but I don't like the fact that there's nobody bidding it.
All right, $94, and I have to concur with you on that one, Dennis. 388 was your low from yesterday, and then two lows last week, right at the $94 area. So if that holds, I like it good to go north here. Below 94, things really open up. On the upside, you have an interesting area too. You have three highs between 95.27 and 95.5. So those are, let's see, whatever way it goes there. Holding 94, I like it. Resistance at 95.5. Dennis, I don't want to upset you because this Micron just keeps on going and
I'm
going.
making money, but not enough. I should have bought more at 50 like I planned to, and I've been like rolling in it right now. But yeah, it's, you know what? This goes up $1 every day. Does this not just go up every day? Like, I know I had a couple red candles in there, but I feel like it's like up $1. It's like clockwork. You take Micron home, you sell it up $1 the next day. It's the same thing again. The thing goes up $1 every day.
I'll just give you one number. 63.98 was the high from yesterday. You're bumping your head against that today. 63.95, your pre-market high. Trading all kinds of volume here. So 64 is the number here in Micron. Got a minute left, Dennis. Do you want to touch on any ratings?
I just wanted to talk the banks here one more time. We touched briefly on them when we had Todd on there, but I just want to look at, like you were saying, the Goldman Sachs and the Bank of America. You're getting a nice bounce here in the banks today, but I'm going to say if you're coming in here and buying, and everybody, is saying, oh, the valuations are good and they look good, there's something else happening here because they have not really participated in any in the last couple months. I mean, they all topped out in March. And now you look here, and they're all trying to make new lows on the year. Now they're bouncing this morning because the TLT is way down. I think this is a bounce to sell. Now I don't know if it's going to turn around and go straight down here, but I'm saying I think there's other problems. I think Deutsche Bank is still a wild card here. Deutsche Bank goes into single digits in the next month or so. You're going to see a lot of these banks really start to roll over because then people get scared. Because I know they say, oh, well, Deutsche Bank's problems is Deutsche Bank's problems. But we've seen how contagious it can be when you lose one of the big banks. And if you start getting problems over in Europe, it will definitely affect our financials as well. And I'm not saying we're going into a European financial crisis here, but if Deutsche Bank goes into single digits, there's going to be some fear out there that could happen. And if there's fear out there that could happen, these stocks can actually start going down over here as well. So I'm very cautious on the banks here. Main reason is still Deutsche Bank because I don't think we're out of the woods there.
All right, I'm cautious on the market here. 07.75 was your pre-market high. 09 was your intraday high from yesterday. So let's just call for things to really get going on the upside, clearing 27.10. And what's also, I just want to note, with everything, going on, we opened yesterday, the 9:30 session at 27.01. That's exactly where we're trading right now. So important to keep this rally going right off the open. Spencer, we're right here at the 9 o'clock hour. You want to wrap things up and preview Thursday's show?
Yeah. Tomorrow we're joined by Mark Chaikin. It's been a while since we had him on. He was over, I think he was actually in Italy. Maybe this is all his fault. I don't know. We're going to find out because he'll be on the show tomorrow at 8:15. But as far as today's show, if you missed any part of it again, you can always catch the podcast on iTunes, SoundCloud, Stitcher, and now TuneIn. Just search for PreMarket Prep or Benzinga on any of those platforms. Thank you to both our guests this morning, Todd Gordon and James Putra, for coming on. Thanks to all of you in our chats on YouTube and premarket.benzinga.com. I will go through and look for your feedback as far as the charts are concerned and see if I can incorporate them. So look for some improvements tomorrow. But that's it for us today. So have a good rest of your day, folks, and I hope you join us again on Thursday.